Hello, welcome to Markets 101. We are going to talk about the Forex market and its market participants. One of the very first questions I had when I got into Forex trading back in 2005, I had been trading already for almost a decade before that, and I'd heard about foreign exchange trading, and I said, you know what, let me get into it. One of the first questions I had is, all right, well, where is this market? Well, it's not anywhere. We're going to talk about that. So in this session, we're going to talk about how the market works, how it puts together. We're going to talk about who the participants are in the market, and then we're going to talk just about some of the rules that come along with the Forex marketplace. Now, the first thing I want to talk about is that the Forex marketplace is also referred to as the interbank market. All right, now, if you think about that term, the interbank market, it basically tells us a lot about how the Forex market works, is that it basically works through banks. Banks are the mechanism that make these trades back and forth of currency. For example, just today, I wired some money to one of our traders in Canada, and I sent our US dollars, and they wired it up to him to be deposited in his bank in Canadian dollars. That is part of foreign exchange. That is an actual trade that was done in the interbank market. So the interbank market is this network of financial institutions, mostly banks around the world. And they are constantly sending money back and forth and back and forth. It is the largest market in the world by far. Right now, there's over $5 trillion a day. When I started, it was over $3 trillion a day. Now it's over $5 trillion a day. This dwarfs all other marketplaces. And again, this is the mechanism that facilitates almost every sort of moving of money, investing overseas. Again, every time you put money into a international mutual fund, your money is going out. It's going out to invest in companies all over the world, and it is all done through the banking system. So the Forex marketplace, it doesn't exist anywhere, but is simply this huge networks of banks that are constantly trading back and forth from each other. So who are the participants in the Forex marketplace? As we talked about, commercial banks. Commercial banks are the main facilitators of the Forex marketplace. However, we have lots of other participants. We have central banks. Now, a central bank is a government-run bank. In the United States, we have the U.S. Treasury. That is the central bank of the United States. In Europe, they have the ECB, European Commerce Bank, central bank. And then in England, we have the Bank of England. In Japan, we have the Bank of Japan. So we have these big government entities that when they need to move money around the world, they're also participating in the Forex marketplace. And then we have investment funds. We have hedge funds. I talked earlier about mutual funds. If you are buying mutual funds that invest overseas, that money is being constantly moved and shuffled all through the world, through the banking system. We have businesses and corporations. Anytime Apple wants to open up a new plant or a new store, let's say they want to open up a new store in Brazil. Well, they need to get their resources, their money from where it's being held over to Brazil. How do they do that? They do that through the interbank market, and there's a transaction there. And then, of course, last but not least, the individual traders. The individual traders, we are tiny, tiny little specks in the Forex marketplace. Now, I say specks, but I also sometimes use the term fleas, meaning we are tiny, 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 and this Forex marketplace can squish us at any time. So when we get into this marketplace, realize there's a lot of great things about it. The fact that it's so big, it is so liquid. It is so easy for us to get in and out of positions. It is so quick and so easy, and it is so, and I'm going to use the term cheap. And what I mean by cheap is that when you take a look at other forms of trading you can do, if you trade stocks, there's going to be a bid-ask spread and there's going to be a commission. Sometimes commissions are going away. If you trade futures, there's commissions, and bonds, commissions. If you trade anything, there's commissions. In Forex, there's usually no commissions, and the spreads are very, very, very small. I mean, to the 0.000001 is how big the spread are. So the Forex marketplace, in my opinion, is the absolute best place for the short-term directional trader to go to try to make some money. It's the most liquid, it's the cheapest to trade, and there are some absolutely great trends. So when we look at the Forex marketplace, let's talk about how it really is working, because the Forex marketplace is open all day long. Now, when you have a usual exchange, like let's take, for example, the New York Stock Exchange. The New York Stock Exchange opens for business at 9:30 and it closes for business at 4. That's their business hours. And if you want to trade a New York Stock Exchange stock on the exchange floor, it's closed. You can't. You've got to go to some other places that are open longer. The Forex marketplace is open all the time. Now, how is that possible? It's because, remember, the Forex marketplace is a collection of banks. So we have broken up the Forex marketplace into 3 basic time zones. The Asian markets, they're going to open up when the Asian banks open. So the first bank that opens is actually the New Zealand banks. The New Zealand banks are the very first banks that open. When you take a look at the international date line, the New Zealand banks open, then the Australian banks open, and then the Japanese banks open, and then the Chinese banks open. And these banks are open for about 8-9 hours a day. And then they're going to close. So remember, the interbank market is a collection of banks. And as long as banks are open, they're going to be doing business. When the Asian banks start to get ready to close, well, guess what's happening? The European banks are just opening up. So we have the European session that starts usually at 3 a.m. Eastern Time. Starts at 3 a.m. Eastern Time. Those banks open up. So again, there's going to be a little bit of an overlap. Between the Asian banks and European banks being open. These are usually very good times of liquidity. And then again, the European session is going to keep going. Now, during the time that the European banks are open, the Asian markets, they're closed. The Asian banks are all closed for business because it's in the middle of the night there. And then at 9 a.m., the U.S. banks open on the East Coast, and they take us through all the way. When the banks close at 5 p.m., guess what is already open on the other side of the world? That's right. The New Zealand banks are already open. So basically, as long as there are banks open, there's always going to be this liquidity of trading. However, with that being said, hopefully you can see that there will be times where the most amount of banks are open. So the time where the European and the Asian markets or the Asian banks are open is usually a very good time of activity. Lots of volume, lots of liquidity, usually lots of movement. Also, when the European session is open, along with the U.S. session, it's usually a good time to trade. So the best times to trade, and I get this question all the time, what are the best times to trade? Now, that is a very loaded question because the best time to trade, it really depends on your strategy. If your strategy is that you're going to buy and hold a currency for 2 weeks, frankly, the best and worst time to trade, that doesn't even make any sense because when you put that trade on during the day, it's not going to affect your success all that much. If you're a shorter term trader, then there absolutely are some best and worst times to trade. So again, the European session, when the Asian banks are closing and the European session is open, that is a very good time. That's usually when we see the most amount of activity. Now, activity typically means movement, and movement means opportunity. As a trader, you need something to change in value, and the more it changes in value, the more opportunity you have. If there's not much movement and there's not much liquidity, it's not usually a good time to trade. So we've got the European session, the first 2 hours, and also basically the first 2 hours of the U.S. session. Those are the best times to trade. Other good times to trade are around major news announcements. Now again, we want to trade around times when there's activity. Again, activity equals liquidity, liquidity equals movement, and movement means opportunity as a trader. If there is no movement, there is absolutely no opportunity as a trader, and you do not want to be trading in the Forex market. Understand that the Forex market is open 24 hours a day. That doesn't mean it's good to trade it 24 hours a day. And frankly, there's some really lousy times to trade it. One of the worst times is right when the Asian banks are closing, but before the European banks open. And again, I'm just going to point out, take a look at the area. There's not a lot of economic activity going on in this area of the world. So again, this is the time when these banks, which aren't really all that active, there's not a whole lot of economic activity going on in this period. There's usually low levels of liquidity, which means low levels of activity, which also means low levels of opportunity. So as traders, we need to be very, very conscious of when our opportunities are going to be good. One of the fallacies that new FX traders have is that they think they can sit down and as long as the market's open, they can make money. That's not true. Professional Forex trader needs to know when is the right time to trade. So we are hunting around these areas of activity. So hopefully this helps you understand a little bit more of the Forex marketplace. It's this collection of banks. We're able to plug into this collection of banks as traders. We're able to send our orders electronically to match up with these what's called liquidity pools, where there's all these transactions happening. Now, all of the prices, they're always going to be changing constantly. They're always going to be changing constantly. And this is 100% based on supply and demand. As we talked earlier, currencies don't have any value. What they do have is they have perceived value. We're trying to capitalize on this perceived value. So the Forex marketplace is open 24 hours a day, 5.5 days out of the week. Just because it's open doesn't mean it's a good time to trade. And again, hopefully you keep hearing me say this over and over again. Just because the Forex market is open does not mean it's a good time to trade it. You must be very, very cautious and conscious of when you place your trades in the Forex marketplace.